without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out.
In today's video, Canadian businessman and entrepreneur Shark Tank star, known as Mr. Wonderful Kevin O'Leary, updates about the crypto market, his take on Bitcoin and where we are headed next in the crypto space. He also speaks about his thoughts on stablecoins, and why regulation is very important for the cryptocurrency industry to thrive in these volatile times, and urges investors to protect their assets moving forward while the suffering unfolds. Please let us hear your opinions in the comments section. Let's dive into his last interview now.
Well, I was just going to say from the context of an investor, not any one specific blow-up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem, and it leaves the remaining companies much stronger. And that's the important part. When a Luna gets wiped out, an algorithmic stablecoin, it's a good thing. Now, yes, you have to sacrifice the company, and you have to sacrifice some shareholders, but it's for the greater good of this nascent industry. And so everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back, and nobody will capitalize them. And that's great. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situation. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news. Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years we will get regulation, and then finally we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. It's really hard because there's not really a large constituency that's permitted to buy it yet, particularly Bitcoin and Ethereum and even USDC, probably the three most popular right now. And so if we do get regulation first, it'll probably happen in stablecoins because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then, of course, it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent. It's tiny, but it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class, because its price will materially appreciate. That's my investment thesis. I think it's important. You made a good observation that in the case of Luna, which got a lot of press globally, it was important for that to blow up, because it actually got some focus within Washington, D.C. on a bipartisan basis on legislation just for stablecoins as payment systems. And so the idea that we can get one bill to actually regulate the entire crypto ecosphere is not realistic, and that's not going to happen. You think about the broad spectrum from NFTs to tokens to various projects, and I always get people to remember when I can is to say to them, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Polygon software. These are software projects will eventually prove out their merit or they won't based on the economics of revenue at some point and all the applications that sit on top of these. So they'll either win because they're good technology or they won't. And so if you're a venture investor, as I am, you want to take a lot of positions because you don't have certainty in what outcomes are going to occur. You need diversity. But in the case of stablecoin, the opportunity, which is so interesting, is that a stablecoin backed by the US dollar and treasury bills, for example, no different than a money market account, would overnight, if it was passed and regulated, let's just take USDC by Circle, for example, and it was actually regulated as a payment system, that would create a standard of payment backed by the US dollar globally. And what politician, regardless of what state they're in, doesn't want that? It secures a place for the American dollar beyond just commodities of oil and iron and other payment systems that are built around commodities that are always backed by the US dollar. But that legislation is very simple. It's 5 pages in some of the bills by Haggerty and Toomey that simply says, look, we audit it every 30 days. We make sure that nothing that's supporting the token is a duration longer than 12 months. And we have total transparency in these audits. Now, not every stablecoin is going to survive the transparent audit, but that's okay. There's enough of them that will, or be started that will. And then we let companies compete, just like there's a money market fund at Fidelity and there's one at Schwab and other firms. That's great, but they're basically all the same because they're FDIC insured and they're regulated. Same thing with stablecoins. So I think that may come first. And what really was the stimulus for that, the impetus, was the Luna explosion, which was very diversified. So, it wasn't just shareholders or token holders in the United States. That blew up the adoption of standardization that creates value. So if all of a sudden there's 10 stable coins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths. They'll be very large and they may have slightly different attributes. But, there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. The last place you want development work done is with the government. They're the worst at it. So I'd let the private sector figure that out and just the government provide regulation. But, everybody's speculating on this stuff. The one constant that I would remind everybody to think about in why the use case for investing in this sector, and I personally believe over the next decade, crypto will be the 12th sector of the S&P. And the reason I believe that is when I teach graduating cohorts of engineers, I don't care what college you do it at. You can go to MIT, Harvard, you can go to Waterloo in Canada or Temple, Notre Dame, you name it. A third of the graduating class, the smartest hands above keyboards in the world, because some of these classes are 130 international, particularly MIT. They have no interest in, as engineers, to go back to the other 11 sectors of the economy. Zero interest in working there. They all want to work on the blockchain. So my argument is you can't take that much intellectual capital, the best and the brightest, put them onto this sector by the tens of thousands every week and not expect incredible outcomes. So it's just like at the beginning of the internet, and all of a sudden when people thought, the internet's not going to be anything, look at it today. It's the backbone of every economy. The same thing I think will happen in crypto just by the amount of intellectual talent. So it seems pretty stupid to me to invite international students from geographies that are very advanced in crypto and then kick them out of the country after they're educated. It's very stupid, and that policy should be fixed. Even the brightest, look at it, Sam Bankman-Fried. I mean, a 30-year-old 22 billionaire. He is an American citizen whose parents are compliance lawyers at Stanford, and even he doesn't operate in the United States because he has no policy and regulation and backbone to work with. So all of that money and that intellectual capital that he is gathering on the Caribbean islands should be stateside, but it's not. So we have to get some policy into this sector, or we'll continue to lose the country's brain trust in this nascent sector. We have this conversation all the time. They're not going to spend an ounce of time worrying about it until they get instruction that they're permitted to index it. And so we're a very long way from that. And so their own clients are calling them saying, look, we'd like to, put 3% into Bitcoin, but they have no way of putting that on the balance sheet of the compliant platform for any of these firms. There's no infrastructure to do that. Bitcoin trades 24/7. The majority of their positions finish trading at 4 o'clock. There's a mark to market with the compliance infrastructure to make sure they're not offside and whatever the mandate is. That's been around for decades, but there's no infrastructure for compliant crypto. So we're a long, long way from that happening. And so most of the people that own Bitcoin are high net worth individuals, family offices, hedge funds, and minor institutional clients, very minor. And so that's the opportunity, though. That's the upside. The whole idea is that if you think it's eventually going to get regulated, all of those other players will come in, and then all of a sudden there's going to be 1 to 3% allocation in the typical portfolio, which is no different than a fixed income or bond portfolio or equity portfolio. And that's when this industry will begin to mature. And then also companies will build the financial infrastructure to actually be compliant in crypto with the reporting, whether it be capital gains and losses or some kind of, lending program where there's an income to it, or staking. All of that has to get worked out, but just zero compliance platforms. And so it's really hard to do that right now. And so that's why, for all the enthusiasm about Bitcoin, virtually nobody owns it. I'm more interested in authenticating hard world assets with NFTs, whether that be real estate, cars, pens, watches, jewelry, collectibles. There's a lot of use case for that and a lot of utility value in that. And I think in the metaverse, if it unfolds the way a lot of people are thinking about, NFTs will be a major part of the currency for transactions. So there's a lot of work to be done there. Most firms that have attempted to monetize it have had a very, very difficult time due to the extreme volatility, the ability to show people how it was created, regardless of what decade it is. So that matters. So I really see the challenge of the NFT market is it's almost impossible for the layman to mint an NFT. So difficult. And then understanding how the wallets, whether they be centralized or decentralized, work is impossible for the layman. So it's the use interface that is so difficult for the average person. And so we're a long, long way. And I would argue that the wallet business for just crypto altogether is, if crypto's in the third inning, the wallet hasn't even started the game yet. It's such a crappy vehicle in terms of security or ease of use or reporting or anything. So there's a lot of work to be done.